if the sector in general is not doing well, all the investment in that sector is going to suffer. So I can invest in company A, company B, company C, company D in one investment instead of investing individually. So that way every month you'll be investing gradually like that, and that's one of the best form of investment, and and get my money back.
Hello everyone, this is Chuka once again. Welcome to Investment Talk with Chuka. We have had a good 2.5 months discussing different forms of investment and then helping you to make informed decisions based on our findings and based on what we feel will help you make more money for yourself and live a better life. So today we're going to be discussing something that is still the same family in terms of investment. It's still the same family of fixed income. We talked about fixed income. I will talk about mortgage and all that. So today we're going to be discussing mutual fund. And to help us dissect this and break it down to the lowest understandable level, I will have once again FAHAD ALIU. But
thank you very much.
Back again.
Thank you very much. It's good to always be here.
Always coming around. Yes, Alice. But tell me, well, people talk about mutual fund. A lot of people think is something that a lot of people haven't even heard about it.
Yeah.
Right. I remember my wife was telling me about different investment opportunities, and she said, "Oh, there's somebody mentioned about mutual fund. That what is mutual fund?" And I said, okay, I will put you through what mutual fund is, but you will agree that you give me some certain percentage. So I want if not all our viewers to also learn about mutual funds, learn about other investment opportunities, and then, be the one to, make informed decisions as regard to different investment opportunity. So what is mutual fund?
Thank you very much, Chuka. Hello, everybody. It's FAHAD again. I'm always happy to be here, always happy to advise you all on investment opportunities in the financial sector. So today we are talking about mutual funds, and to answer the question, mutual funds are simply a form of investment, right, that allows several individuals to come together, to pool their money together and invest in a diversified portfolio. So how it works is that collect money from me, collect money from you, collect money from other people. A lot of people will come together. Then we'll now invest in selected instruments, either securities or equities, depending on the type of mutual funds that we are looking at. So it helps investors to have diversified portfolio. So I can invest in company A, company B, company C, company D in one investment instead of investing individually in company A, investing individually in company B, individually in C and D. And also, if it's in terms of fixed income also, it can allow me to invest in different securities instead of investing in a single, putting all my money in one security. Mutual fund will help you to diversify that portfolio. So that is what mutual fund is.
So basically, mutual fund is more
multi-purpose vehicle.
Yes, multi-purpose.
Yes,
vehicle, yeah.
yes.
Let me put it this way. So, what are the different types of mutual funds?
Okay, thank you very much. So there are several types of mutual funds that individuals can invest in. Examples include we have the equity mutual fund, right, which takes only stocks, right, shares of companies, different companies pulled together, right, and we invest into that. That's the equity. We have the fixed income mutual funds. It gathers different fixed income securities from different countries, from different risk, pulled together as well. We also have index funds such as the SP500, such as Investco, TTD, and so on. So these investment pools tracks selected indexes like the SP500. It takes into cognizance the top 500 companies and so on and so forth. We also have commodities mutual fund that brings different commodities together for investment sake. Then lastly, we also have the sectorial mutual funds, right? This one deals with each sector. For example, if I want to invest in the tech sector, so I can invest in a mutual fund that contains different tech shares such as Apple shares, Nvidia shares, and so on, pooled together into one mutual fund.
Oh, fantastic. So, what are the risks?
So the fact that it is diversified, right, makes the risk a little bit spread. Right, the risk is spread because we have a lot of diversification. So if one stock is not doing well, or if one component is not doing well, the other components will, cover up, you understand, for it. However, there are risks that are involved, such as market risk, right? If prices of those securities are moving, it will weigh down on, other ones, you understand, because most of the times they are, for example, if we are talking about the sectorial funds, right, if the sector in general is not doing well, all the investment in that sector is going to suffer for it, you understand, and so on and so forth. So there are risks involved in terms of price movements, right, of the components of that mutual fund. We also have credit risk involved, right? Sometimes this happens in the case of fixed income securities, right? When you invest in fixed income securities mutual fund, right, sometimes some of the components of those mutual funds, they may default on paying back, their obligations. So in that case, we're going to have a default in the mutual fund, and it's going to affect investors in the long run.
Many people will ask, since basically what mutual fund is all about is also investing in fixed income securities and all that, and a layman will say, look, what is the advantage of investing in a mutual fund rather than since the mutual fund is going to invest in securities and all that, why wouldn't I just go ahead and invest in security? But go ahead.
Okay, so the advantage that it possesses over investing in individual stocks rather is, number one, diversification.
Exactly.
So if one, like we said earlier, if one is not doing well, the other one will do well. So you don't only invest in one thing, you invest in different components. You understand? So that is one. Number two, lower transaction costs. How do I mean? If I invest in company A and my broker charges me, let's say 0.001%, right, of my investment. If I invest in company A and I get charged, I invest in company B, I will get charged also. I invest in company C, I will get charged. But if I invest in everything at once, the stockbroker is going to only charge on one. Exactly.
So rather than spread the charges
exactly, so I'm only paying one charge. And I'm also getting the benefit of investing in all other funds. Then also another advantage that it gives is liquidity, right? Because it has a lot of varying components, right? It makes it very liquid. You understand? So I can easily liquidate my investments and and get my money back.
So basically, for me, what's one of the advantages and what strike me most is in one of my earlier videos, I talked about spreading your risk.
Yes.
And I also mentioned that no big entrepreneur invests in a particular sector.
Yes, only.
So basically, one of the advantages is that you spread your risk across different sectors. And also, as you spread your risks, you also spread your profitability. So if I want to invest in mutual fund now, how do I go about it?
Okay, so first of all, like we always say, analysis, very, very important. You have to analyze the mutual fund that you're looking at to satisfy what you're looking for. Right, what kind of income are you looking to generate from this from this investment? Then how long are you looking to do this investment for, and so on and so forth. You ask these questions, then when you have answer that suits your need, then you now select a fund that suits your need. Right, so when you select a fund, you contact your stockbroker also and tell them, okay, this is the kind of mutual fund that I want of all the mutual funds that you have, and they'll go ahead and place a bid for you. So in investing, right, you can either invest a lump sum, right, at a go, that okay, I have this money, probably you made some money, you just want to invest it at once, right? Or you can invest in what we call SIP, systematic investment plan, whereby you're going to every month you say, okay, certain amount of money should be debited from my account for this investment purpose.
Okay.
So that way, every month you'll be investing gradually like that, and that's one of the best form of investment, right? You earn your salary, you know that a certain amount of your salary is going into investment, and they will be debiting it every month. You place a standing order on that, and they will be investing that amount for you every month. Before you know it, in the next 5-10 years, you're up the roof.
Wow, fantastic. So what are the factors that inform your decision making in terms of investing in a mutual fund?
Okay, so number one is...
I want you to add this together with this question too.
Okay.
So what are the durations? I mean, for T-bills, for example, right? If I invest in T-bills, I have option of investing for 90 days, 3 months, 6 months, and then 1 year. Right? So for bond, you can do between 3 years to 50 years, right? But for mutual fund, is there a fixed period of investment? Or I just want our viewers to to understand what
So there is no limit to the tenure on. It's just like the stock, right? As long as all components of the mutual fund exist, right, they will continue to there's a word I'm looking for there. They will continue to roll over.
Okay.
Right, they'll continue to roll over. There will be continuous turnover of components of that mutual fund, and it should keep being in existence. Example is the SP500, right? SP500 has been around for a long time, and it will still be around, and it is still going to be around in future.
Okay.
You understand? So there is no time limit as to maturity of mutual funds.
Wow. So if you want to get out, let's say I have an emergency and I've invested for 6 months, but I need money now. What do I need to do, and what are the implications?
So if you invest in long-term mutual funds, right, you can exit easily because of the liquidity of the space, right? Also, there are some institutions that offer 6 months mutual funds, 3 months mutual funds, whereby in 6 months, in 3 months, they're going to return, right, your money back to you. Then you will now decide if you want to reinvest or not. You understand? So there are some institutions that also offer that.
Yeah. So for me, let's say there's an emergency. I've invested for 6 months.
Yes.
And I've just done 2 months.
Yes.
What are the implications? What are the cost elements?
Okay. So first of all, as long as it is liquid, you can sell off and take your money back.
Yeah.
Then obviously your stockbroker who sold for you will also take their charges.
Okay. Yeah, exactly. So there's going to be charges.
Yes, there's going to be charges from your stockbroker.
Okay.
So, yes.
All right, you've heard it all from him. Mutual fund, it's multi-purpose vehicles, actually. Let's just put it that way. It just enables you to diversify your investment, through a company that has other investors, right? I'm just trying to recap so that our audience will understand in the simplest form of what mutual fund is. So, FAHAD,
thank you very much.
We'll have to come back. We'll have to do the second episode of this, because I know that a lot of people want us to go deep into into what mutual fund is. Time is not too much of our friend.
Yes.
So I'm going to be bringing you back here, and then we'll discuss further on mutual fund. So guys, this is part 1 of mutual fund. I'll be bringing FAHAD back again to discuss further on what a mutual fund is and the benefit. Till we meet again, this is your investment advisor, Chuka Nwachukwu. Bye-bye for now.